Good afternoon and good morning, everyone. Welcome to Ozon preliminary fourth quarter and full year 2020 operating results call. You can find the press release hereof on Ozon IR website. The speakers on our call today are Alexander Shulgin, Chief Executive Officer, Daniil Fedorov, Chief Financial Officer, and Igor Gerasimov, Corporate Finance Director. Please note that some of the information you will hear today may include forward-looking statements. Forward-looking statements are based on management's beliefs, assumptions, and information currently available and subject to known and unknown risks and uncertainties, many of which may be beyond our control. We caution you that the forward-looking information presented is not a guarantee of future results, and that actual results may differ materially from those made in or suggested by the forward-looking information presented in today's call. Any forward-looking information presented is made only as of the date of today's call, and we do not undertake any obligation to update or revise any forward-looking information. We encourage you to refer to the cautionary statements contained in our press releases and SEC filings for a more in-depth explanation of the inherent limitations of such forward-looking statements. And now I'm turning the call to Ozon management team.
Hello, this is Alexander Shulgin speaking. Dear ladies and gentlemen, welcome to our call. So yesterday, we completed offering of convertible bonds and raised $750 million in proceeds. We also issued an ad hoc fourth quarter preliminary operating results to update the market on our latest trends. We are hosting this call today to provide some highlights and comments on Q4 results and the bond offering and answer the questions you might have. This call is not substitute for the full year results call, which we will be holding on 30th of March, and after we release our full year audit financial results. So now let me start with a brief overview of the Russian e-commerce market and Ozon. Russian e-commerce market represents large, structurally attractive market of approximately 3 trillion rubles, with low penetration of about 9% in 2020. This market is highly fragmented with only 24% market share for the top 3 players. Overall, we believe the current state of the market represents a unique opportunity to facilitate and benefit from fundamental shift of people from offline to online. And we are focused on creating an important moat via extensive countrywide logistics infrastructure that we are building and on cementing our leadership position in the market, in the e-commerce market. Now a few comments on the trends in 2020 and recent quarter. So this past year was transformational for the e-commerce market globally and the Russian e-commerce market as well, which is not an exception. The Russian e-commerce market growth accelerated to about 40% year over year due to combination of the structural factors and COVID-19 related lockdowns speeding up online adoption. As a leading multi-category e-commerce player, in Russia, we are seeing strong positive network effects. We believe that COVID-19 effect is not transient for us. Our cohorts remain strong with gradually improving frequency even after lockdown eased. These two factors driving better. There are two factors driving better performance for our business. First is our continuous investments into infrastructure and information technology. Secondly, we enhanced value proposition for our sellers and buyers over the course of 2020. This allowed us to grow much above the market and accelerating versus competition. Marketplace, which now accounts for over 50% of GMV, is at the core of our opportunity and is driving our growth story. On top, we're actively seeking to expand into new adjacent verticals where we see significant growth opportunities such as fintech. Now, some additional color on the drivers of performance in Q4. In Q4, our GMV, including services, exceeded 74 billion rubles, with growth accelerating to over 140% year over year, significantly ahead of our key competitors. For the full year, GMV exceeded 195 billion rubles, with stellar growth of over 140% year over year. So the growth rates of 140% is just a coincidence between Q4 and full year. Our order growth remained incredibly strong. Number of orders increased to 29.6 million in Q4, growing by 137% year-over-year. In the full year 2020, we delivered 73.9 million orders, increased by 132%. And as we discussed, Marketplace is our growth engine. In Q4, Ozon Marketplace reached 52% of GMV, doubling versus 26% in Q4 of 2019. On the full year basis, Marketplace share reached 48% of GMV compared to just 17% in 2019. This growth, coupled with strong cash flow generation, allowed as an Ozon platform continue to show strong positive operating cash flow dynamics in the fourth quarter and reached break-even for the full year 2020 from the operating cash flow perspective. A few things to highlight about our GMV performance. Strong and sustainable GMV growth throughout 2020 was mainly driven by rapid scaling of the marketplace. Our vision is to connect every organization that sells goods and services to millions of buyers in Russia via our marketplace platform and provide highly reliable and convenient service and best user experience to people. In Q4, we were able to achieve on-time delivery of parcels over 95%, which we believe is a very good benchmark versus competition. To do that, we have been and will continue to invest into our logistics and fulfillment, as well as product, technologies, and processes. As a result, our loyal customer base continued expanding, and our focus on on-time delivery, wide assortment, and better customer performance is paying off. We are seeing strong cohort performance. Both order frequency and customer retention show continuous improvement, not only compared to previous years, but also post-lockdown period, which eased in July this year after brick and mortar stores reopened. Access to our fulfillment and logistics infrastructure via Fulfilled by Ozon and Fulfilled by Seller business model and recently launched extended FBS model to fintech and advertising tools makes our proposition to the seller businesses with Ozon even more attractive. And more sellers result in wider assortment, which boosts our order frequencies. In this past year, we capitalized on the opportunity to onboard more sellers to our platform. Recently launched sales to business customers, as well as launch of extended FBS, should allow us to further scale our marketplace and provide better services both to our sellers and to buyers. We are confident that significant increase in buyers and sellers in 2020 will continue to grow and will drive positive network effects for Ozon. Another important trend that we see, which drives our top-line growth, is emergence of e-commerce in the regions. Several years ago, regional sales and activity of buyers were far behind Moscow and St. Pete. As we invested and expanded our regional fulfillment capacity and delivery infrastructure, we attracted customers and sellers to our platform. GMV growth in the regions accelerated, and in December last year, 2020, reached about 50% of total GMV of our company, compared to 40% in December 2019. Supported by investments in Ozon last mile delivery and fulfillment infrastructure, regional customers are also catching up with capitals in terms of frequency and GMV spent on the platform. This past year in 2020, we opened operating fulfillment centers in Rostov-on-Don, in Kazan, in St. Pete, and in Novosibirsk. This allowed us to offer faster and more reliable delivery to buyers and enhanced fulfillment and logistics services in the regions, attracting more sellers and optimizing our unit economics. This drives better assortment and faster delivery, both of which are key drivers of stronger cohorts, customer cohorts, and higher frequency. While e-commerce penetration in the regions is still 2-3 times lower than in Moscow and St. Pete. Now a few words about our infrastructure. So lack of logistics and fulfillment infrastructure in Russia resulted in dramatically lower e-commerce penetration of just about 8% versus other markets globally. For example, 30% in China and about 20% in United Kingdom, despite relatively high share of internet users among Russian population, where penetration stands close to 84%. Investment in logistics and fulfillment allows us to drive market growth, and the market, as we discussed, was growing in 2020 of about 40% year over year. And we take market share rapidly in a fragmented market by growing multiple times faster than the market. Just to remind, the growth rate of the company of Ozon was 140%. To launch and accelerate marketplace flywheel effect and to build a leading e-commerce platform in Russia, it's important to have reliable infrastructure. Ozon operates one of the largest fulfillment and delivery infrastructure in Russia. As of the end of 2020, our fulfillment footprint was over 200,000 square meters across the country. During the peak day, we were able to process and deliver 640,000 parcels within one day, and we're storing approximately 50 million items in our fulfillment centers. Delivery infrastructure expansion in the regions helps to increase delivery speed and improve customer convenience. Leveraging the Fulfilled by Seller business model to attract more sellers, tackle additional expansion opportunity across regions, and further support development of new product categories. Choice of convenient delivery channels. We see that customers appreciate choice of courier delivery, pickup points, parcel lockers, and our scalable solution in logistics, namely franchise model and self-pickup points, enable us to scale operations with more flexibility and efficiency. Now I will pass the microphone to Daniel Fedorov, who will take you through our short financial update.
Yes, so hello everyone. Although we're not disclosing financials, the full set at this stage, we would like to give you a couple of highlights. Speaking about our profitability and cash flow generation, we as a company are focused on a sustainable cash flow generation with a continued investment in fulfillment and technology, also supported by negative working capital. Strong positive operating cash flow performance in Q4 was supported by Ozon's business model with low receivables and significant payables, which allows Ozon to use its expanded negative working capital in ruble terms as an important source of liquidity. It's also very important to keep in mind that in Q4, Ozon typically experiences significant cash flow from consumers, while cash outflow occurs in Q1 of the subsequent year when Ozon pays sellers and suppliers for goods sold. But nevertheless, even on a full year basis, Ozon showed break-even in operating cash flow as a result of a significant effort around liquidity management, strict control practices, and high growth that we shows. On top of that, as we mentioned during IPO, cash flow is one of the important metrics which we use in our motivation scheme internally. Talking about the balance sheet, it's very important to walk you through the convertible bonds that the company placed. Ozon has raised $750 million through issuing senior and secured convertible bond due 2026. The bonds will be convertible into ADSs listed on the NASDAQ. The bonds carry a coupon of 1.875 per annum, payable semi-annually in August and February, with the first interest payment date on August 24, 2021. The initial conversion price of the bonds has been set at $86.6480 representing a 42.5% premium above the reference ADS price of $60.8056. We see this as a very strategic capital raise, and we see several reasons behind this action. First of all, we are optimizing our cost of capital. We're strengthening our balance sheet, which allows us to significantly increase our strategic and financial flexibility. The opportunity that comes from operating in early stage markets that lack infrastructure will continue to provide us with growth for the next quarters and years to come. And we, of course, continue to see tremendous growth opportunities in our domestic market. Raising additional proceeds at this time will allow us to accelerate development in many core and adjusted highly value accretive areas and the new verticals, including among others, fintech space. And talking about fintech specifically, we see huge value in developing complementary services. For example, fintech products for both sellers and buyers to increase engagement and retention and make higher value purchases more affordable. In Q4, for example, Ozon launched partnership with major banks to provide its marketplace sellers with loans via our Ozon Invest platform in order to assist our sellers base in growing their businesses. In December 2020, Ozon Card launched a virtual card, allowing for faster and wider adoption of this product. And we see much greater loyalty and higher order frequency among Ozon card holders, with similar dynamic indicated by our virtual card thus far. So I think this concludes our short highlights.
And we're open for Q&A.
Hi, we do have some questions from the audience right now. I do have the first person who would like to ask the question, Slava Dikteryov. Please, Slava, unmute yourself so you can ask the question.
Yes, hello, and thank you very much for the presentation, and congratulations on the first ever conference call as a public company. So a couple of questions from my side. Firstly, when do you think you can start feeling the base effects for the business so that significant deceleration may ultimately appear? Basically, what are the bottlenecks for growth in the medium term? And do you think that the new initiatives like fintech can sustain those growth levels at elevated levels for a prolonged period of time?
Thank you, Slava. So let me take this question. It's Igor. Thinking beyond 2020, we're quite confident in our outlook for the 2021. We're encouraged by stronger cohorts, positive network effects, and benefits of scale that we're seeing. And we expect to reinvest gains from our old performance and focus on growth, underpinned by healthy cash flow as we're scaling up. We obviously do not provide guidance for 2021, and we will release it in March together with our full year results. But we can say that we continue to experience strong growth, driven by inflow of both buyers and sellers. Obviously, you should keep in mind the seasonality and high base of March of 2020. But apart from that, we remain pretty confident.
Okay, thank you very much. And my second one would probably be on the recent take rate reductions on your marketplace. Can you assess the impact somehow? What was the merchant feedback, and have you seen accelerated flow of merchants after that decision, and ultimately the impact on the GMV growth?
Sure. So on take rates, we continue to see quite a strong inflow of merchants, irrespective of moves associated with take rates. In fact, as of 2020, the number of active sellers on our platform has well exceeded 20K, and we see continued inflow of a couple thousand every month. Therefore, we experience absolutely no issues on this front. Speaking about the impact of our recent change in the structure of the commissions on the take rates, I can say that it will be very difficult to assess what ultimately be the impact on the blended take rates, because in our business, the take rate is a function of a variety of business models with which we operate, i.e. FBS, FBO, and category mix within those business models. Therefore, trying to assess to what blended take rate level we will ultimately arrive to is very complicated. But I'd say that in those different business models, also lower level of take rates in FBS will definitely be offset by lower OPEX and FBS, because the goods flow bypasses part of our infrastructure, which is ultimately cheaper for us.
Okay, thank you very much.
Okay, perfect. Thank you. It looks like we do have a few other questions from the audience. So Miriam Adise, you are more than welcome to ask your question. Please unmute yourself.
Hi, everyone. Thanks for taking my questions. The first one just on fintech. So, I mean, you spoke there about how you're focused on that as a new adjacency, and you do have a few products already. So can you talk about what are the key priorities? Is it really just accelerating some of the products you have already, or are there new areas beyond this that you want to get into? And then linked to that, how are you thinking about the growth here in terms of going via organic means or via M&A? Thanks.
Sure, Miriam. Hi. So on fintech, as you might remember, we have two key pillars in our business. One vertical is associated with payment products, which we provide to our customers. And another vertical is related to a variety of lending options, which we provide to both sides of our marketplace, i.e. our buyers and our sellers. Key focus of 2021 will be continued investments into the product development because we see a very big organic growth opportunity in fintech. We believe that we will be prioritizing internal development of the product and we will be allocating quite significant resources there. Speaking about M&A, I mean, this is a general comment which might be applied to all other potential M&A considerations. We fundamentally tend to favor organic growth, but tactically we might be opportunistic in case any decent opportunity pops up. At this stage, there is nothing exact on our agenda, and we will continue prioritizing organic developments of the fintech options.
Great, thank you. And then second question, just on delivery costs and delivery trends. Just wondering if there's been any significant change in the mix in terms of courier versus pickup point delivery, particularly since you said that the regions was 50% of GMV there. And if you have any commentary on delivery cost per order and how that's trended as well in the last couple of months. Thanks.
Yes, hi, Daniel. This is Daniel. So in terms of the mix, I think we saw some minor shift towards pickup points as we developed the network quite aggressively. But I think it's just continuation of trends that we have seen in Q2 and Q3, so nothing dramatic there. In terms of cost, I think it would be better to wait for the actual numbers to comment. I think what you should keep in mind that Q4 is generally a bit better just in terms of seasonality, because we see starting from Black Friday up until end of December, it's elevated volumes that we experience, and that helps cost a little bit. But I would rather wait for March 30.
Okay, thanks. And just one more, if I may. Just on the premium program, just wondering, just in light of what some of your peers are doing, if this is something that you may focus on more to help customer retention, and if so, what sort of services would you look to add there? And if you could also just comment on the share of organic traffic now in the business.
In terms of premium, I think nothing changed since our IPO conversations. Currently, our premium subscription program that we have in place just right now works more like as a standard loyalty program. So it works very good, but very well, but just for a limited number of our customers, for our best customers, and it doesn't really work as a big growth driver. As we communicated during IPO, it's something that we are still thinking about, and how potentially that can be renovated, maybe connected to fintech a bit. And in terms of organic traffic, I think it was around 60%, so it's nothing really that changed. And again, I would be cautious of discussing Q4, not just because we didn't release full set of numbers, but also just bearing in mind the seasonality that we experience. December usually is much better in terms of organic traffic.
Okay, thank you very much.
Great, thank you. We do have another question from Ivan Kim. Ivan, you can unmute yourself.
Thank you for the opportunity. I have two questions, please. The first, one on your contribution profit following the decline in referral rates. So is it reasonable to expect contribution profit will increase versus 2020 just directionally? That's the first question, please.
Yeah, thank you, Ivan. So we're not guiding for 2021, and I can say that we will provide, a more exact communication by the time we release our results in March. But I'd say that fundamentally, from our standpoint, cash flow is one of the key KPIs we remain most focused on, because because in our view, it is the key metric that indicates the healthiness of the underlying business, and the rest is, rather accounting. So far, in 2020, we're pretty happy with our performance on the OCF side. And as you are well aware, this business model is subject to quite significant positive impacts of negative working capital. So we will continue to extract some benefits from that going forward.
Sure, thank you. And my second question, or just on some GMV trends that you saw in January, maybe if you can comment on that, please.
Yeah, would rather not comment on trends for a particular month, because we want to see how much plays out, and February is not done yet. Also, we should keep in mind that, first quarter and first months will be subject to high base effect of the last year. Therefore, we'd rather see how the March ends before providing any actuals or any directional growth indication.
Okay, sure. Yeah, then maybe if I may, just the last one on the fulfillment space. So do you still plan to add about 150,000 square meters of fulfillment space in 21, or you could accelerate that to facilitate further growth? Thank you very much.
At this stage, we are still finalizing our investment program for this year, but I can say that definitely expansion of the fulfillment capacity is one of the key things which drives our growth. And as you might remember from our previous conversations in this type of business, infrastructure at the same time is a huge bottleneck, and therefore we ought to keep investing there in order to accommodate increased flow of goods and sales.
Yeah, I'll just to add, I think 150 around that is probably the right number to think of, because apparently all launches for this year are already contracted. So, and as for as for the future, as Igor mentioned, we are constantly reviewing the opportunities and to balance the growth rate of the company, share of FBO and share of 1P, and the opportunities in the market that are out there, in special in regions.
Thank you very much, guys.
Thank you.
Okay, great, thank you. We do have a question from Svetlana Suhanova. Svetlana, please unmute yourself so you can ask the question.
Thank you very much for the opportunity to ask questions, and big congratulations with very strong Q4 and placement of the bonds. I also do have two questions. My first question would be on the competitive market dynamics. I think this week was quite dynamic in terms of announcement from Yandex about big push into e-commerce with, you know the numbers. End of last year, Sberbank, after your IPO, announced big expected investments into e-commerce. How do you think it would impact your market position? That would be my first question. And my second question would be regarding your e-groceries business. From being here in Moscow, what I do see that after an IPO, in line with at least my expectations, you had a very big push into apparels and into e-grocery. At the same time, when I see Infoline numbers published for the full year 2020 of around 12 billion rubles GMV for your e-grocery business, your FMCG, it looks very, very significantly underestimated from for me. If you can give us any highlights on your FMCG estimates, it would be much appreciated as well. Thank you.
Hi, Svetlana. So, answering your first question on competition, I guess I guess you should know better of what the competitive dynamic is, because Yandex and few others have released, and Valbris, they have released their numbers, and you can compare our GMV growth rates with their GMV growth rates. And probably you can arrive to to the conclusions yourself. Speaking about how it impacted our market positions and our growth rates and how it impacts the outlook, I say that you're also right in highlighting that it coincided with our IPO. Therefore, we're obviously monitoring the competitive developments, but so far we're pretty confident that the market is very big and there is sufficient space for us. As for your question on the grocery, you're definitely right that this is one of the categories we're focused on. We pursue a bit different business model and approach as opposed to other players on the market. So we're focused on a bit different business model versus Yandex, Lavka, and Samokat, which still ensures pretty fast delivery. We see that, albeit it's very small as a percentage of total GMV as of now, it gains quite a lot of traction, and we will be focused on developing that going forward. You also had a question on Infoline rating, as far as I remember. I guess it might be, we might discuss it offline, but it might be related to the methodology and the way they treat different categories and SKUs. It might be very technical for this call.
Yeah, my question, thank you very much. My question on this e-grocery, actually I meant FMCG category, which I think is the right way to look at, the way we look at Wildberries, the way we look at, for example, like you heard Yandex announced 24 billion of their FMCG category revenues. So that was my question. If you can, not about Ozon Express, rather than FMCG category and core Ozon business, and of course Ozon Express business altogether. If you can give us any kind of hints regarding that number, would be much appreciated.
Yeah, I think we'll figure out. I think maybe we'll take it offline, and maybe during the call we'll make sure that it's like for like numbers. And talking about competition, yes, Svetlana, just to add on competition, I think, well, first of all, we actually got used to live in the world of, let's say, scary claims and press releases. And I think nothing changed here. And of course, our IPO just showed the investor interest, and we see some acceleration of activities. But we believe that we are well positioned to gain share further. Yeah, this is pretty much it. Yes.
Thank you very much for the call and the opportunity.
Okay, we do have another question from Catherine O'Neill. Catherine, if you can just unmute yourself so you can ask the question, please.
Hi, thank you very much. I've got three questions. One is actually sort of back to the grocery point, or more specifically on dark stores, actually. I think when you had the analyst presentation, you said you had 3 dark stores. I just wondered where that number is now and what your plans are for expanding that in 2021 in terms of how we should think about investment requirements and sort of unit economics. The second question is around the pickup points and lockers. I can't recall exactly the pace at which you were opening them. I feel like it was something like 100 a week. That might be completely wrong, but I just wondered if you could talk about how many you're sort of adding in terms of frequency and whether that's expected to accelerate given the amount of cash you're going to be sat on. And then finally, I think you mentioned about the number of active merchants. I didn't catch the number. If you could just repeat the number of active merchants you have on the platform as of the end of the year, and the number of SKUs, which I think was about 9 million 2 or 3 months ago, and how that compares to the competition, that would be great. Thank you.
Sure, Catherine. So coming back to the first question on dark stores, indeed we continue expanding our network of dark stores. So far, we're mainly focused on the key cities of Russia, which are densely populated, primarily Moscow and St. Pete, because we still see a very big market opportunity in those big cities standalone. Going forward, we might consider regional rollout, but we definitely will be prioritizing Moscow and St. Pete in the first place. As you might remember, we pursue a model of higher SKU counts, which presumes that the dark stores are of a slightly different format compared to what Yandex and Samokat have. But we're quite confident that this is the right strategy going forward. Speaking about the pickup points, if you might remember, we have a franchisee-based model for pickup point expansion, and therefore the count of pickup points is growing pretty fast. I will not provide the exact number, but I can say that with zero capex required to open a single pickup location, because it is franchisee based, the pace of expansion is definitely quite considerable. Your third question was on the number of active sellers on our platform, and earlier I said that it is well above 20K as of the end of 2020. The SKU count on our platform is also quite significant. It definitely has increased since the last time we spoke during the IPO, and it exceeds 10 million.
And do you have any sense, just to provide some context, of how that compares to some of the other platforms at this point?
It is very hard to tell how much SKU any single player has because of different treatment of methodology, different reporting standards, and etc. So I'd rather not to comment on that.
I think what we can say is that Infoline report, I guess, suggests that we have the biggest assortment, but yeah, it's difficult to comment on others' assortment.
Okay, and then sorry, just back on the dark stores, can you at least disclose how many dark stores you have at the moment? If it was sort of 2 or 3 months ago, where you're at the moment?
We're not disclosing that, but it's growing quite fast.
Okay, thank you.
Catherine, do you have any other questions?
Oh, no, that's it. Thank you.
No problem. Thank you. We do have another question, one more question actually from Alexei Filipov. So Alexei, if you can just unmute yourself, you can ask your question.
Yes, hello. Thank you for the call. I have a couple of questions, please. So trying to understand why you raised additional financing. Can we expect any M&A based on this, not only in fintech, as you commented earlier, but in other segments, for example? And on fintech, you mentioned that you want to spend additional money on fintech. And can you give some color on what are the costs there? Because it doesn't seem like very capex heavy initiative. Mm-hmm. And my second question is just technical clarification. When you're talking about positive operating cash flow, is it net of lease payments or before? Thank you.
Okay, sure. So first of all, on bonds and M&A, we've raised bonds in order to have more strategic flexibility and in order to have the ability to accelerate the growth in case we see that there is an opportunity to do so. And given that, I mean, internally, we consider what we see ahead of us as a tremendous growth opportunity, it might make complete sense to speed up the rollout of infrastructure and keep developing a bit more actively other products and initiatives which are adjacent to our core business. We do not have any exact M&A targets in our minds, and fundamentally, we're strong believers into prioritizing organic growth. Obviously, I mean, we're happy to assess any options which they might be, but only if we see that they might be increasing the speed of the product rollout, or they might be improving the product and the strategy we're focused on. You also had a question on our operational cash flow. Yeah, so this the metric we have disclosed in our press release is OCF, and it's before leases.
Probably some color on fintech costs.
Sure, on fintech. We will be focused on. I mean, in 2020, we have been relying on the solutions which were provided by the partners, and we see that for a number of reasons this is suboptimal, and it will be very complicated to ensure that the user experience which we have in mind, i.e. our target vision, is possible to be built on the third-party solutions. Therefore, we'll have to be investing quite a lot into the IT infrastructure there, into the business development, and into the product development. We're not disclosing, I mean, how much we're going to invest. And yes, it's true that our fintech is quite small as a percentage of the total business by now, but definitely we will be accelerating the speed of the product development on that front.
Thank you very much.
Thank you, Alexey. We do have a question from Juliana Elemnalskaya. Juliana, if you can just unmute yourself so you can ask your question.
Hi, everyone, and congratulations on strong growth in the fourth quarter. I just wanted to follow up on Ivan's question. Firstly, with stronger, so it's very clear that cash flow is the key metric for you. Yet with stronger GMV growth, shall EBITDA break even here to be sooner or not?
We will communicate some targets on profitability and maybe other KPIs by the end of March. By now, I'm afraid we're not in the position to provide more color.
Okay, thank you. Secondly, if I may, a more like high-level question, do you notice any impact from decline in disposable incomes on the check, like maybe some trading down trends, or people prefer some cheaper stuff, anything like that?
We didn't observe any significant or fundamental changes in any of such trends. So everything remains more or less in line with what we have been discussing with you previously.
Okay, and
yeah, just to add, I think it would be we truly believe it would be impossible to read, consumer environment from Ozon's results. So I wouldn't even try.
Yes.
And can you also elaborate a bit on the performance of categories? What are the key or the fastest growing categories within the GMV we observed?
Sure. So we saw quite a decent. I mean, all of the categories have been performing quite well, and we see that the mix of categories which we have is pretty balanced. So I wouldn't say that we have a very heavy skew towards any of those. However, I mean, apparel is growing exceptionally fast. I mean, way above all other categories. We also see quite strong growth trends in car parts and in other verticals, but overall pretty decent growth across the board.
Thank you.
Do we have any other question from the audience? If somebody else would like to ask the question, please raise your hand and you will be able to ask the question live. Okay, it looks like we do have a question from the audience. We do have a question from Pierre Safa. So Pierre, you can just unmute yourself so you can ask the question.
Hi, thank you very much.
Pierre, can you unmute yourself?
Yes, hi, can you hear me now?
Yes, thank you.
Perfect. Thank you for the opportunity to ask a question, and thank you for the call. Congratulations on great results. So quick question on the fintech side. How capital intensive should we expect beyond the investments? How capital investment should we expect the fintech initiatives to be? And in particular, when you look at the lending business initiative, is that something you foresee will be on balance sheet, or are you looking at potentially alternative sources of funding for that vertical?
Sure, Pierre. So on fintech, I guess most of the investments will come on the operating expense front, because we're not capitalizing any of the R&D which we're doing. So it all goes through our operating expense line. And capital expenditure might be required for servers and for IT for hardware and for IT infrastructure. We do not expect that loans will appear on our balance sheet. I mean, we might only be making this as, I mean, part of the business model as of now. Investments into working capital and then reselling the loans to our banking partners. And so far, given that in general, banking sector is very competitive and highly commoditized, banks are quite eager to tap into new business verticals which they're not able to penetrate on their own because of the offering which they have, which is definitely suboptimal from the user experience standpoint. And therefore, they're quite happy to have someone originating the loans for them.
Perfect. Thank you. And then I guess second question, if I may, on the logistics and infrastructure side, are you noticing any type of so obviously there's a lot of capital flowing, you know, it's becoming increasingly competitive as you mentioned, but it remains, the opportunity remains quite young, right? So you know, the e-commerce penetration continues to remain quite low in Russia. But at the same time, are you noticing any significant cost inflation on the fulfillment side, or, you know, on the infrastructure side as you continue to scale?
Sure, Pierre. So what we see on the market, although I mean definitely and especially post our IPO, there is lots of public noise about aggression in the e-commerce space. As of now, we do not experience any significant pressure. And I guess it's also fair to mention that in the context of our capital raise, we did this primarily in order to have the ability to accelerate our own developments and not to fend off any of the competitive concerns. On the speeds of the last mile and fulfillment centers rollout, this still remains, first of all remains the subject of the execution. And this is, I guess, the key bottleneck for us, our own ability to execute on our own ambitious plans.
Understood. Thank you.
If anybody else from the audience have some other questions, please raise your hand so you can ask the question. So it looks like there are no more questions from the audience. And if nobody has any questions, we can conclude the webinar. And I would like to thank you, the management team from the Ozon, Alexander, Daniil, and Igor for taking time and joining us for this webinar.
Thank you very much. That's Alexander Shulgin speaking. And we are looking forward to see you or host you in our March 30 Q4 results call.
Thank you so much and have a wonderful day.